Good evening or good morning, good afternoon, everyone. I'm thrilled to have you here, not just as investors, but as believers in transformation, because I'm about to tell you something Wall Street doesn't want you to believe, but will soon have no choice. If you put your trust entirely in one form of money, you're placing your future in the hands of forces you can't control. History shows again and again that every currency, no matter how mighty, eventually loses some of its strength. Governments print more of it, economies change, and confidence shifts. The people who suffer most are those who believed their paper savings were immune to time and policy. Real wealth isn't what the government says a dollar is worth, it's what that dollar can buy when the world changes around you. The idea of safety in one currency is comfortable, but comfort can be costly. A lifetime of work should not be stored in something that can be diluted overnight. When a government runs large deficits or when inflation creeps in, the purchasing power of that single currency weakens quietly. It doesn't announce itself with a headline. It happens inch by inch. The coffee that cost $1 last year now costs $2. The same number in your account buys less each month, and few notice until it's too late. The wise understand that money is only a claim on value, not value itself. You can't eat it, wear it, or live in it. The question, then, is how to preserve what your labor created. It's not about timing markets or chasing the next big trade. It's about understanding that when one system shakes, another often rises. The world is full of alternatives, real businesses, land, productive assets, and even other currencies that can act as anchors when the wind changes direction. Putting everything in one place is like planting a single crop and hoping the weather never turns. It might grow beautifully for a while, but one bad season can erase years of effort. A well-built portfolio should have resilience. That doesn't mean panic or speculation, it means preparation. Think of it like owning a group of businesses across sectors or countries. When one stumbles, another keeps the engine running. There's another risk in relying on one currency. It narrows your thinking. You start viewing the world through one lens, missing opportunities elsewhere. A person who understands multiple economies, multiple forms of value, and multiple systems of trade has a wider field of vision. That perspective can be worth more than any interest rate. We live in a time when technology and policy can change faster than anyone expects. New monetary experiments are unfolding and old systems are being tested. The lesson is simple. Don't cling to the illusion of permanence. Protect what you've built by keeping flexibility in how you store and grow it. The measure of financial wisdom isn't how much you make when times are easy. It's how much you keep when times are hard. Don't let faith in one currency blind you to the truth that value must be earned, guarded, and diversified. The world rewards those who adapt, not those who assume yesterday's system will last forever. When the world gets noisy and screens flash prices every second, it's easy to forget what truly holds value. The numbers on the screen are only promises. They shift with sentiment and fear. But real things, productive assets, land, businesses, things that make and move the world forward, don't vanish with a market swing. They have substance. They work for you quietly, whether you're watching or not. Owning something real gives you a sense of calm that paper wealth never can. It's like having a farm that produces crops year after year. You can wake up in the morning knowing that value is being created while you sleep. A good business keeps serving customers. A good piece of property keeps its usefulness. A valuable resource remains valuable, no matter what headline runs across the news ticker. The trouble with the modern world is that people have mistaken motion for progress. They buy and sell, hoping to catch a wave or a rumor. But real wealth isn't built in motion. It's built in ownership. If you own a great business, time is your partner. You don't need to guess what will happen next quarter. You trust that the engine you own keeps compounding over years. That's the difference between renting the moment and owning the future. Paper promises can be printed, manipulated, or revalued. But real things stand on their own. A productive company that makes something people need will survive inflation, recessions, and market panics. A piece of farmland will still grow food. A house will still shelter a family. and a well-managed enterprise will still deliver value even if the market forgets it for a while. There's another reason to own real things. It keeps you grounded. When you know what you own and why you own it, you stop reacting to every flicker of fear. You understand that value doesn't disappear because someone else gets nervous. You start thinking like a builder, not a speculator. Builders don't ask, "What's the market going to do tomorrow?" They ask, "What will this produce for the next 20 years?" The best opportunities often come when others run from reality. When people chase abstract instruments, they forget that behind every stock, every bond, every figure is something tangible, or nothing at all. The difference between success and regret lies in knowing which is which. If what you own creates, grows, and endures, you can ignore the rest. In every storm, people who own real things sleep better. They don't have to predict the next move, they simply hold what has purpose. Wealth built on solid ground weathers every cycle. It's not about collecting more, it's about holding what lasts. Because when the noise fades, and the crowd moves on to the next illusion, the owners of real things are still standing. They may not talk the loudest, but they always end up with the most. The world has a way of humbling anyone who thinks they can predict it. Just when things look certain, something unexpected shows up. A new technology, a policy shift, a war, a panic. Nobody gets every decision right, and that's why spreading your risk isn't just strategy, it's survival. Diversification isn't about fear, it's about respect for the unknown. It acknowledges that no matter how confident you feel, the future can still surprise you. Owning a mix of assets doesn't mean you don't have conviction. It means you understand that even good ideas can take time, or fail to work when you expect them to. A great business can stumble, a strong economy can falter, and a trusted currency can weaken. But when your capital is spread across things that earn in different ways, one mistake won't sink the ship. You give yourself the ability to stay calm while others are forced to sell. Think of diversification as building a team instead of betting on a single player. Each investment has its own role. Some thrive when interest rates fall, others when inflation rises. Some protect you during storms, others capture opportunity when skies clear. Alone, each might falter. Together, they balance one another and smooth out the ride. It's not about owning everything. It's about owning enough of the right things so you can sleep well when headlines turn ugly. People often fall in love with one idea. They find a stock, a trend, or a market they believe can't lose. That kind of certainty feels powerful, but it's dangerous. The market has a habit of teaching humility to those who forget its lessons. The best investors in history didn't win because they were always right. They won because they protected themselves when they were wrong. That's what diversification does. It buys you time and resilience. You'll hear people say that concentrating builds wealth and diversifying preserves it. There's truth in that, but preservation is underrated. It's what allows compounding to keep working. Losing 50% and then doubling your money gets you back to even. Avoid the loss and you never waste years recovering. Protection isn't a drag on returns, it's what makes long-term success possible. Diversification isn't exciting. It doesn't make headlines or spark conversations at dinner tables. But it's the quiet habit that separates those who survive every cycle from those who don't. It's the discipline of saying, "I might be wrong," and preparing for that possibility before the market forces you to. The future is unknowable, but that doesn't mean you should fear it. It means you plan for it. When your wealth is spread across strong, productive assets, different industries, countries, and currencies, you build a cushion between your life and uncertainty, and that cushion gives you the one thing money alone can't buy: peace of mind. In the end, that's the greatest return of all. The market has a rhythm, just like the seasons. It rises, it falls, it rests, and it renews. Yet most people only see the moment they're in. They chase the excitement of today's trend or the fear of tomorrow's headline, forgetting that real wealth is built by understanding the longer cycles of human behavior, business, and value. The economy is not a straight line, it's a pendulum. And if you learn to see those swings, you'll stop reacting and start positioning. Every boom plants the seeds of its own bust. When optimism runs wild, people borrow too much, spend too much, and assume good times will never end. Then the inevitable correction arrives, clearing out the excess. That's not a failure of the system. It's how balance is restored. On the other side of pain comes opportunity for those patient enough to wait. History has shown that patience, not prediction, pays the highest dividends. Thinking long-term means focusing on what endures when the noise fades, businesses that produce real value, leadership that allocates capital wisely, and industries solving essential problems. These survive every cycle. The names and numbers may change, but the pattern doesn't. A good company bought at a fair price will reward you more than a perfect trade made on impulse. The world's best investors aren't the ones who can call the next quarter. They're the ones who can sit through the next decade. There will always be moments when it feels like the world is ending. Markets will drop 30%, headlines will scream crisis, and everyone will swear this time is different. It never is. The tools, technologies, and players may evolve, but human emotion remains the same. Greed, fear, hope, and impatience drive cycles far more than data does. If you can stay calm when others panic, you'll find yourself buying what everyone will later wish they had. Time is the friend of the disciplined and the enemy of the impulsive. Compounding doesn't work if you're constantly starting over. Wealth grows quietly when you allow time to do its job. Every cycle rewards those who think in decades, not days. Instead of trying to outsmart the market, focus on owning things that can grow through multiple environments. Businesses with strong cash flow, management with integrity, and products people will still need 10 or 20 years from now. Short-term thinking gives you noise, long-term thinking gives you vision. If you let the daily swings decide your actions, you're letting the market lead you instead of the other way around. But if you train yourself to look past the current storm, you begin to see that every downturn is temporary and every panic hides an opening. In the end, success in investing isn't about timing the market, it's about staying invested through its cycles. The real reward goes to those who think long, act steady, and let the compounding of time turn patience into fortune.